let me ask you about central banks. And Art, you can join this as well. I mean, you've got Janet Yellen, who right now is saying, I can't move on interest rates because, one, the U.S. jobs market isn't looking so hot, and two, I have the threat of Brexit lingering over us all. Now that, in fact, this has happened, does it leave Yellen in a position where she might have to do something more accommodative, like another round of QE,
can I answer
print
that,
a little
Trish?
more money? Go ahead, Danny. You're a former central banker yourself. You should know.
Yeah, well, on the day they raised rates in December, I said it was fingers crossed and hoping economics, because they said, and I was very, very strongly against it, they said that the balance of risks were balanced. Well, they clearly weren't, with the Brexit vote coming and other things. And at that time, they said that before rate rises, I didn't believe it, basically the markets didn't believe it. And with these shocks coming through, the bad job numbers, rate rises are off the table for 2016. And at the time, I said the next move would be a cut. And I think that's still the likelihood.
So we're going into
see
negative interest rates, in your view?
Well, not yet necessarily. No, I think they'll go back to zero first, and they think about doing more quantitative easing. But the interest rate cut is the early one. But I do think in the UK and the US, that's on the table. Let's
play that with Art Hogan. If, in fact, Janet Yellen moves back to zero and puts a little more money printing out there into the system, is that going to be enough? I mean, do we really need that right now?
No, we don't. But Danny brings up an important point. One of the reasons that the Fed really wants to raise rates this year is so they have something for a situation like this. This is not the DEFCON situation that they need. But you know, when you're at 25 to 50 basis points, you have nothing to give back. So to Danny's point, we need the Fed to be north of 100 basis points. We need to be 1.25, 1.5 by now. We're late to the party. We need to get there. And I would disagree with Danny. The next thing the Fed does is going to be raise rates. Now there may well be some conversations about global synchronized central bank intervention, but I don't think it's going to have anything to do with either quantitative easing or interest rates. It's going to have things to do in the currency markets, and that's it. To the extent that we're going to figure out come next week that this is not, this is not the reason that we cut rates or start quantitative easing.
Charles, I've made the point to sort of, to a few people. Look, we'll handle this. The UK will handle this. The EU will handle this. You're watching a huge sell-off in part because people just didn't anticipate this. But the reality is the world has not changed as dramatically as, say, some of the doomsdayers over there in the UK would like you to believe.
No, you're absolutely right. But I think what we're seeing is a recognition of the world. In other words, a reflection of how the world, particularly the West, feels. And, it's interesting hearing a conversation about central banks. I think part of this sell-off, by the way, remember back in the day when the notion of more accommodation, of more quantitative easing would have sent the market higher? I think we're at a point where the financial markets have realized the central banks maybe just aren't as important as they used to be. And that's a sobering thought when you think about it, because that means there's no more backstop. So it's almost a moot point for me whether the Fed lowers rates again or not, because I don't think it reflects anymore. Look at the yen. Look what the Bank of Japan has done. Negative interest rates, and the yen's gone through the roof. So, there's a certain realization, an economic realization and a political realization that's manifested in this sell-off today. Overall, though, there's a lot of things that have to change on both sides of the Atlantic to really get the true economic changes that these people are hoping for. And I think the market is still going to be range-bound, Trish.
Art, let me ask you, who might be next? I mean, a lot of people didn't want to see this happen because they figured, well, Greece, Portugal, Spain, they might say, I want out too. And that could start to unravel more things.
Can I just say one thing? Spain is voting on Sunday. I have been all for the folks in Barcelona and that area to have their own independence. They've been pushing for this. A year ago, 1 million of them held hands across that nation. They lost the battle to Spain hundreds of years ago. Their culture was taken, their language was taken, and yet now they generate about 70% of the economic activity. And guess what? They get about 30% of the benefit, just like in America and other parts of Europe.
Taxation without representation. I mean, that's another big theme that's being played out on the world stage right now.